I'm going to talk a little bit about current market activity, which will lead us into supply and demand. I'm going to go over the U.S. housing market because Tallahassee does not stand alone. If something happens in the U.S. housing market, we're going to see it happen here a little bit later. We're going to talk about foreclosures and forbearance. Any of y'all worried about a swamp of foreclosures getting ready to hit the market? If not, do some reading. I'm going to answer the biggest questions I get. Hey, is this market like 2005? Or even the worst one, is this market like 2008? So we're going to be able to very clearly and accurately answer those questions today. I'm going to talk about how do you listen to the market, because I think that's something that's key in all of our businesses. If you listen to the market, you tend to make the right moves. I can tell you back in the early 2000s and the 1990s, I did a great job of listening to the market. And then I got pretty full of myself and I stopped listening somewhere around 2005. I'm sure many of you know the pain that I'm talking about, but that's not going to happen to me a second time. I'm listening. And then a little bit of how to proceed from here. Okay, market activity. Let's talk about year-to-date home sales. Okay, this is the fourth best year on record. So as good as this market is out there, 16 years ago was better. Okay, Tallahassee's a bigger market now, and we have fewer sales than we had in 04, 05, and 06. So this answers the question, is this level of home sales sustainable? Well, I have some great concerns about our sustainability, but not about the rate of sales that we're producing right now. This graph, and I know you can't see it very well, but neither can I. It basically breaks down the sales each year between new construction and existing home sales. And the little solid gray line there on the right axis shows you the percentage of the overall market that new home sales represent. And on the far left in the 1990s and all the way up to 2005, 21% of all sales in Tallahassee were new construction. 21%, better than 1 in 5. These are not MLS data. This is from the tax records. This is the no kidding, this really happened side of the house. Okay, 21% was new construction. Well, we obviously did a little overzealous building in 05, 6, 7, and we had to pay the piper. We had to clear inventory. And it took till 2016 to clear the excess inventory. Because of that, we saw that drop. And we've basically spent more than 10 years below 10% of the sales in Tallahassee were new construction. So we went from 21% down to 10%. Okay, right now we're up at about 13%, 12.5%. Okay, we're only building half of what the market needs from us. Okay, if you built in 2016, the market balanced. 2016 was when it was time to go back to work. Okay, we are now at a point where anybody who owns a lot who can nail 2 boards together can build a house and sell it. That's how desperate the market is for inventory. Okay, so let's get specifically into supply and demand. I'm going to talk a little bit about mortgage interest rates. We're going to look at the relative supply of homes for sale. We're going to look at historic home valuations. We'll talk about the new construction premium, something you should pay attention to. I'm going to talk specifically, is our market oversold? Does it look like 2005? And then the status of our existing inventory. A bunch of writing up here. This is the only slide like this. I did this for me so I could remember talking about this. Basically, the Fed came out about 4 or 5 months ago and said, you will not see any change in the Fed rate until 2024. Okay, well, a couple months ago, they're like, oh, you might see a couple changes in 2023. Okay, so as the Fed stands right now, there will be no change to the Fed funds rate in 2021. And there won't be but maybe 2 in 2022. Okay, and what that's caused is Freddie Mac's forecast, and Freddie Mac has always been a little bit pessimistic on their forecast. They're forecasting a 3.7% average rate in 2022. Okay, I can tell you that will not have a huge impact on the demand for homes. Okay, so just from an economic side, the Fed is going to be helping the housing market at least until 2024, based on what they're saying right now. Okay. So this is a graph I've used for years. It confuses everybody, but it has a lot of what you need all on one graph. And the little red line there, that's the real supply of homes out in the market, and it's on the left side. So if you look back like in 2008, there were 3,300 homes in the MLS for sale, okay, 3,300. Today there's 1,250, okay, and supply's up a little bit. We got our seasonal push, it's up, it's been in the 900s, okay. The green line down at the bottom, that measures the sales. Okay, you can see that's generally rising. The market's improving. Okay, the gray line, that's that non-seasonal relative supply of homes, months of supply. The supply relative to the current rate of demand. That's what each one of those blue bars is. Okay, and then that yellow line running across, that's a balanced market. That's where supply and demand are at about the right number to see appreciation at about 3.25% a year. Okay, and we've been, that's a number that real estate people have, I guess we blessed 50 years ago, and everyone talks about it. So 6 months of supply is what the market is seeking for balance. We're at 3 months of supply. Okay, so a little undersupplied at this point. Okay, this is the exact same graph, but just for homes over $800,000. Okay, 9.3 months of supply. It's the best it's been since I really started tracking this. It got up to 21 months of supply at one point. Okay, remember, 6 is kind of a balanced market. Right now, there's like 34 homes on the market that are over $800,000, and we sold 1 last month. Okay, so we've got to understand that the market isn't the market for everybody. There's a specific market in every area, in every price range. I would not recommend you build a $600,000 house in Southwest Tallahassee. Okay, but I can tell you, you build one in Northeast Tallahassee, you build one in Southeast Tallahassee, it'll sell long before you get the roof up. Although you might not want to, since you don't know what it costs to build it. But okay, so this is something that comes out real terrible from where you're seeing, but that's okay. You really only need to see the colors. Okay? What this does is breaks down every price range, $50,000 increments on the left side, and it tells you whether or not you should build. Okay? If it's red, you should build. It means there's not enough of it. So if you take the very top left one that's under $50,000 Northeast, you should be building those. If you can build $50,000 houses in Northeast Tallahassee, I can sell them. High demand, no inventory. Okay? But there are some good areas and good price points where you could be building and we could be selling those houses. Okay? And I'm going to tell you that you should dig deeper on these supply and demand reports, and we'll talk a little bit about that more later. But everything you need to know to forecast your next year, year and a half's worth of work can be done with one of these tables. This is non-seasonal, meaning this is what it's been for the last year. This is where it stands right now. Let's talk a little bit about home values. And this is going to be important to you because I'm talking about specifically existing home values. Okay, and when I say values, I mean price per square foot, not prices. Okay, existing home value, price per square foot, you want to know where that's at because it'll tell you how receptive what you can do, how receptive the market will be. If you've got a build for $220 a foot and the average house is selling at $100 a foot, that's a tough sale. Okay, but what we're seeing here, I took that little yellow line there, and that just takes the growth of the average value of homes in Tallahassee. I just stretched the 1990s all the way out till now. And our values today are a lot higher than where they would have been forecast had we done this same graph back in the 1990s. Okay, and what that's telling me is that homes are appreciating at a faster rate today than they were 30 years ago. Okay, and some thoughts on value. And value to me always comes back to your side of the house. Values are going to eventually relate to cost when supply and demand are imbalanced to the inventory side or balanced. And what that basically means is if we need more houses, you guys got to build them. And if you got to build them, there's a real cost of doing that. And if your real cost of doing it is way, way higher than the current market, you're going to pull the market up to you. And if your cost to do it is pretty much equal with the market, you can oversupply the market. Okay? And so I track these things now because I stopped doing it in 2005. Some thoughts on where your prices and your cost to build are going to go. The Florida minimum wage is going to rise 75% in the next 5.5 years. Okay? That is going to impact not just labor, but all of our material costs, all our delivery costs, everything that y'all have to spend money on, except for land, everything you're spending money on is going to go up in cost at a faster rate than you've ever seen. Okay, minimum wage went up 58% from 2005 to today. Okay, so 16 years it went up 58%. In the next 5.5, it's going up 75%. It's not going to get cheaper to build houses, though it might get a little cheaper over the next couple months as we settle out the supply chain issues from COVID. I say several months, that could be a year. Low inventory levels are not being replenished by builders. We're not building enough homes in Tallahassee. We're not building enough homes in the U.S. What I'm talking about here, I could have this conversation in just about every community around the country. Okay, this is not a Tallahassee issue. Okay, land prices have been artificially low. A lot of our builders are hesitant to go out and hand pick and cherry pick some lots because they think they're too expensive. They're not too expensive. Okay, some of the lots that we were building on the last couple of years were foreclosed upon 2 or 3 times. Everyone knows, correct me if I'm wrong, in 2005 the average lot price was $112,000. You know that? $112,000. We're still in the mid-50s because we're trading and bringing lots to the market that really haven't had to pay the price. They were foreclosed and foreclosed and foreclosed, and they're into them relatively cheap. Those days are almost over. Almost every lot coming to the market in the future is going to be at a real cost. And so we're going to see land prices soar. And land prices really have not moved a whole lot in the last 10 years. And when I say land prices, I'm not talking about undeveloped. I'm talking about individual lots. Okay? So again, I think new construction is going to pull up existing home values at a higher and higher rate. When this year started, I forecast a double-digit appreciation rate, and I said, don't be surprised if we don't hit 20%. Okay, based on what I'm seeing right now, if the year closed out today, it'd be at about 14.5%. Okay, but I know inventory is going to be shorter at the end of the year. Prices are going to be moving higher. When interest rates start to move higher, buyers are going to be desperately pulling the trigger trying to lock in. I would not be surprised if we don't hit 20% appreciation this year. And to put that into a number that you can appreciate, because it's appreciation, the average appreciation in Tallahassee is about 3.2% over the last 30, 40 years. Okay? So if we said it's going to be 21, 22% this year, we're basically saying at the end of this year, we will have met our 2028 prices or values. It's going to be 2028 in December. And then next year is going to happen. This is the new construction premium that I talked about. What is the cost to the consumer to buy new versus used? Is this a fair study of what you get used versus new? Absolutely not. This is what is the average price per square foot of existing versus average price per square foot of new homes. Look over on the left side of the graph. See that little green line? That's it bouncing between 0 and 10% every year. In the 1990s, your new construction was hitting the market, and it was roughly 0 to 10% more per foot than the existing homes market. Okay? If you look at 2016, that number hit 60%. Okay? It's dropped all the way down to 30%. I don't know what the magic number is, but right now, new homes are a lot more attractive today than they were 4 years ago. Okay, and they're about as attractive today as they were in 2007 because I guess they were all plummeting in price. So is our market oversold? Small markets will sell fewer houses than large markets. I think that's a fair expectation. If you've got a couple 100 million people living somewhere, there's going to be more home sales than there's going to be in Two Egg, Florida. Okay, so Tallahassee's growing at 1.16% a year for the last 30 years. Okay, what that means though is our population today is 15% more than it was in 2005. It's 20.5% more than it was in 2002. Right now, the number of sales in our market is very similar to what we saw at this point in 2002, and yet there's 20% more people living here. Okay, so going back to, are we oversold? Absolutely not. The number of people we have here support more sales than we're seeing right now. And the red bars are the existing, the blue bars are the new construction, and I had a little question there, can you make the blue bars bigger? So does today's market look like 2005? Well, what this shows is permits and sales of new construction. And what you'll see from 1992 all the way to about 2008 is there's always some give and take between permits and sales. And I like to think of that as the speculation gap in the market. Okay, but when everybody tightens up and gets real scared, like 2008 all the way to 2016, there's not a lot of gap between the permits and sales. Not a lot of speculation being done by builders. Okay, well, what's interesting to me is as of 2018, we're seeing that gap open back up again. I think that's healthy for the market. That gives, in theory, gives us some inventory out there. Our population will hit 1 million in the year 2100. Okay, don't you think we'll have more sales than what you're seeing here? Okay, we might not have more new construction. That might be out to Madison County. But the yellow highlighted comment, I just took that off a slide from my presentation in 2018. Okay, inventory is low and falling. Demand is rising. This is nothing like 2005 yet, but I'll be watching closely. Okay, is 2005 causing you to deny the cycle? Okay, I just copied that right from my 2018 talk to the builders. Nothing's changed other than as bad as it was on the supply side, it's gotten worse, which means better for you. Does today's market look like 2005? Well, in 2005, we were full speed ahead, building, permitting, building. We just had the 2 best months. This only goes through April. We just had the 2 best months of permits, and they're not even half of what they were at the peak of the market. Okay, so the short answer to does this look like 2005? Absolutely not. This is not a crazy pace. The current trend of new permits is the strongest we've seen in 13 years. This is a picture of the MLS. All the homes that are on the market. What you see, what you probably can't see, in red, the lighter stuff on top, those are the homes for sale that are not under contract. The lower blue stuff, those are the homes that are for sale that are under contract. I mean, from your distance, you can see the blue doesn't change a whole lot. You know, the blue is growing, but it's really the same number of homes that are under contract each year. What's gone from the market is the homes that are not under contract. Okay? Right now, 2 out of every 3 homes that are in the MLS is already under contract with the buyer. What's normal is about 30%, maybe 32% this time of year. 70% is what we hit 2 months ago. The seasonal flush of inventory, existing home sellers hitting the market came in, it dropped to 65%. By the end of the year, I'm worried it's going to be 75 or 80%. The 1-year trend of this is at 55%. That means over the last year, 55% of all the homes that were on the market were already under contract when buyers went to go look at them. Okay, that is not healthy. That's why we're having bidding wars. So let's switch over to the U.S. housing market because there's some things we can get out of the U.S. housing market that I don't have far enough data to pull for our market. This is the supply of homes for sale in the United States. Okay, the blue bars are the raw number of homes listed, and the red is the months of supply. Okay, so right now, let's look at points A, B, and C. Point A is 2006, and look how the supply was rising. Look how the blue was growing, okay? That really is not that big of a deal if I'm you, if I'm me. The fact that supply is growing is not that big of a deal in and of itself. But the red line below it, point B, that's the relative supply of home. That is the supply relative to the current rate of demand. That's the months of supply of home. That, in my opinion, is something you should be monitoring every single month. You should understand where our relative supply of home is, because it's going to tell you, am I in an aggressive mode or am I in a defensive mode? And the good thing about the real estate market is it doesn't change overnight. You track this every month, you'll notice the trend months before you need to start responding to it. But it is something you have to watch on a regular basis. Okay, so point B was the time when we saw the months of supply taking off, and look how high, and again, I don't know that you can see it from back there, but in between B and C, it got up to 11 months of supply in the US. 11 months of supply of homes for sale. Got worse in Tallahassee. 11 months of supply of homes for sale in the US. Point C is 2016, and if you were monitoring this, in 2016 you would have said, oh, look at that. The months of supply has been dropping, been dropping, been dropping. Wow, we're creeping into a seller's market. Okay? That is some good tactical information if you're building homes. How bold are Tallahassee builders? I took, and this isn't really a comparable set of data, but it's close enough for government work. I'm comparing the permits in Tallahassee with the housing starts in the US. And I think they parallel each other. And the blue line is Tallahassee building permits, and the red line is housing starts. Okay? And what this shows me is that it got ugly for everybody about the same time, but it got real ugly here quick. Our market came down hard compared to the overall US market. Okay? But it came down fast, and we should now be rebounding. And the little circled area there is the level of new construction homes that should be being built right now, if we just want to parallel the US market. Okay? Instead, something happened in 2018, we quit building homes relative to what home builders around the country are doing. Okay? They're not building enough homes. The supply of homes in the US is not enough. But compared to builders in the US, Tallahassee builders are building less. That's something I found interesting. I had no idea what I'd find when I put that together. Okay, so this is those housing starts in the US. And what I'm looking for is a trend. I'm looking for something that will give me guidance as to what the heck's going to happen in the next couple of years. Okay, and where you see those, the horizontal dotted line, that is our current months of supply level shown across every single year. And we know our market is rising, so I said, what happened every time Tallahassee was, or the US was at this current level and was rising? What happened? Well, in 1959, we had another 3 or 4 years before the market turned. Okay, meaning build more, build more, build more. 3 more years of growing new construction. Okay, in 1983, we saw 3 or 4 more years of build more, build more, build more. Okay, in 1996, we saw 10 years of build more, build more, build more. Okay, so here we are at that level. The trend is moving higher on construction. Conservatively, I think you have 2 to 3 years where we're going to need more homes than we did the previous year, because that's what's always happened in the past, going back 70 years. Okay? Without me knowing what I know about the current supply of homes, I would tell you this graph alone tells me build more homes in the US. A big threat to the market could be the millions of foreclosures that are out there. There are 2 categories. There are homes that are going to be foreclosed upon, but the government policy has been no foreclosures, and that was pushed to July 1st. I don't know if it's been extended yet to the end of the year, but most of the major banks have come out and said, we are not going to pursue foreclosures until 2022. But nevertheless, there's a day of reckoning coming on foreclosures. There's also this issue of forbearance. And forbearance, for those of you that don't know what forbearance is, that is a banking term meaning you don't have to pay your payment this month. Okay? Forbearance is the lender literally says, stop making your payments. We'll add the interest to the end of the loan. We'll figure it out once we get you paying again. There are 1.9 million people in forbearance in the U.S. Those are not considered loans in distress. We've got 2.3 million that are loans in distress. So when you throw the two together, let's just round it out and say there's about 4 million homes in the U.S. that in theory could have some problems. Anyone who talks on this subject on YouTube says the end of the world's coming, okay, and it's coming when all these foreclosures hit the market. Because there's going to be this magic meeting among banks, and they're all going to decide what day they're going to hit those foreclosures right on the market, and the world's going to come to an end. Okay? Well, time will tell. But I don't think that's going to happen. One thought, though, is if next year 1,000 foreclosures hit the market, that would obviously add to the supply, right? Okay? Would that be the same as you running out and building 1,000 homes? Okay, and the answer to that is no. If you build 1,000 homes, you are adding to the supply of properties in Tallahassee. If we foreclose on 100 or 1,000, we're going to turn 1,000 for sale homes into 1,000 for rent homes, because those 1,000 buyers could become 1,000 tenants. Okay? It will still have an impact on the supply and demand for homes, but over the long term it'll have zero impact. So if we're short of homes right now, 1,000 foreclosures is not going to fix the problem. For the short term it is. There's going to be tons of supply and buyers will have homes to choose from. Okay? But over the long haul, that will not cost you 1,000 properties for you that you can go out and build. We still need those properties. Only 1% of the loans in the United States are estimated to be 30 to 60 days late. 1%. 1% of the loans are estimated to be 90 to 180 days late. Less than 0.5% are estimated to be in foreclosure. Well, why is such a small percent in foreclosure? Well, because you're not allowed to if it's a government loan. Okay, so that's one we'll really have to evaluate once the floodgates open on that. 5% of mortgage loans are estimated to be in forbearance. 1 in every 20 loans is in forbearance. Well, forbearance this time was, if you tell us COVID is a problem, we'll let you go into forbearance. Well, guess what? If you could choose not to make your mortgage payment, seems like not a bad choice. That's why we see 1 in 20 loans in forbearance. Are those people going to turn around and have to sell their house afterwards? I guarantee you there's some people in forbearance that needed it. They're going to need to sell their house. Okay, but I also know quite a few people that went into forbearance and have been stockpiling cash. So I don't think the forbearance issue is nearly as great as what the numbers show. Why is all this important? Well, if 4 million homes hit the U.S. housing market in January, that would be interesting. Okay? I just don't think it's going to happen. I think foreclosures are going to hit the market, and I think they're going to come in waves. The thing is our market is so grossly undersupplied that we need the homes. Now, I am sympathetic to people who are in that position to losing their home, but from an analytical standpoint, it's just what the market needs. And most people have in their mind a foreclosure is this house that's falling down in terrible shape, needs a lot of work. These are people that are holding equity in their homes. Homes have gone up 30-some-odd% in the last 3 years. Okay, if they don't get foreclosed on until next year, their home might have gone up 50% from the time they got into trouble till now. They're going to sell their home because the bank can't just go foreclosed. It's a process. If they're not in foreclosure process now, it's 120 days best case scenario. And realistically, it's a year out for a hard push lender foreclosure. So it's a process. And the market needs every single one of those homes. I just don't see it as being this big imminent threat that a lot of the talking heads say it is. I could be wrong, but I don't let it slow down what I'm doing. I'm not worried about a gross oversupply of homes in the near future. This is a graphical depiction of why this is not 2008. If anyone tells you this is just like 2008, they haven't seen this graph. Okay, what this shows is two main things in the U.S. The blue, that's the equity in the market. Okay, for those of you who have been in the business only like 10, 12 years, back in the old days, people actually owned homes and they were worth more than what they paid for them. Okay? We went through a period of time from 2008 to 2016, 2017. Any lawyers in the room? All the lawyers who sued real estate people, they had to go and do a new line of work. There was no equity. Real estate companies were broke, and homeowners had no equity in their home. There was nothing to sue over. All those lawsuits went away. We're seeing them come back now. Okay, there's equity in the market. That blue area on there is the equity in the market. The red line is the debt in the market. So if you look at the first star, in 2006, debt was higher than equity. When the housing market collapsed in 2006, debt was higher than equity. Our market was upside down and then we flooded it with inventory. Okay, that was 2008. Today, debt is way below equity. If we flooded the market at a comfortable pace, it would be consumed. And all that equity would go to the people that are upside down, or that are hurting on their ability to pay their loan. Am I saying 100% of people are going to get all their money in a check with equity at closing? No. But I'm saying the majority are. They live in homes that are worth more than what they owe on them. Okay? That's an important thing to understand when everybody's saying the world's coming to an end because of foreclosures. This is not like, oh gosh, look at all these foreclosures. Who wants them? Well, I got a line at my office. You got a foreclosure, give me a call. Okay? I'll get you at least 4 offers on it today. This is not 2008, part 2. This is U.S. supply of homes in the highlighted area in yellow there. The blue line points to the real supply. 4 million homes were on the market. At the height of the market back in 2006, 2007, 4 million homes were on the market. The red line shows the relative supply was at 11 months of supply. Okay? That yellow area represents that period of time that those foreclosures started hitting the market. Okay? Now, put that yellow over on the far right. There's 2 months of supply in the U.S. The U.S. is more undersupplied than we are. Okay? And the supply of homes is just under 1.5 million. So we've gone from 4 million down to 1.5 million homes. And they say there's 3 to 4 million foreclosures and forbearance loans out there. Okay? If we got all of that, that would be adding a year's supply to the market. And if all hit right away, it would make us oversupplied for a while. I'm guessing our government would, oh, rates are already low. Yeah, we would consume them in about a year. That's why they call it a year's supply of home. I don't mean to make it lightly, but everybody else is making a huge issue out of these foreclosures, and you need to understand they're actually something the market needs. Okay, this is that same graph, but this is just Tallahassee. Okay, far left is 2008. Okay, our months of supply in red got up to 15. 15 months of supply, I promise you, was no fun to be in real estate. Okay, the blue, our actual real supply was 3,300 homes. 3,300 homes is now 1,250 homes. I'm going to fly through the last, I'm dragging on a little bit here. So is this like 2008? No. Okay, is this like 2005? Well, maybe, but that was good. Weren't you building a lot of homes in 2005? Just pay attention. If you pay attention, you'll know when 2008 is coming around. So what would I track if I was a home builder? Number one is I would track the relative supply of homes every single month in Tallahassee. Okay, because if you do that, you'll see the changes as they're happening. I promise you, we're at 3 now. If it goes to 4, that's still good news for you, and it's going to take a while to get there. But if you watch it go from 3 to 4, you need to know we're heading back to a market that's correcting. Okay, and I might not even tap the brakes at 4 months of supply, but at 4.5, I'd start thinking about it. Okay, I'd look at the U.S. supply of homes for sale because maybe it's happening faster in other markets than it is in Tallahassee. Okay, I'd look at the status of mortgage loans out there. Okay, it's rarely accurate, but it's consistent. It'll tell you what the government thinks is happening with people paying their mortgage. If you start seeing it go in a very negative way, you'll probably start to see the months of supply change. Okay, and then probably the most important thing you can do is the status of the homes for sale in Tallahassee. That's where you're going to see the market change first. Okay, when you start seeing the long-term trend of homes under contract reverse, just know that we're starting to head in the other direction. Doesn't mean you need to panic or do anything, just means you need to be alert for a while. So how many homes should be built? Bottom line, I figure this year if we could put up 1,150 at the worst case scenario, but realistically more like 3,650, you would balance our market. So if anyone's here worried about overbuilding, you're right if that number starts with a 3 and it's in the thousands. This is, in case you were wondering, because if you think about it, we really don't need all these homes if secretly someone's building all these apartment complexes, right? Because all we're really talking about is places to live. If we're creating a lot of multifamily, then we are reducing the need for single family. Well, multifamily is going through the same thing single family is. It's too low. So listen to the market. Today's buyer's chomping at the bit. Give him what he wants. Be the un-cola, but don't go crazy. Still deliver a carbonated beverage. What I mean by that, when the cola war started, it was Coke and Pepsi, Coke and Pepsi. RC Cola wanted to get in the market. They came out with a marketing slogan. Drink the un-cola. Well, Coke and Pepsi are like 99% the same. RC Cola is 99% the same as them. It's all the same stuff. If you want to build, don't go crazy. Don't go build a monument to yourself. Build what the market's buying. There is absolutely a ton of buyers standing by for the traditional Tallahassee home. Okay? Don't be afraid to look at cost-cutting ideas. Today's buyer doesn't have any choices. Okay? HGTV has inspired our buyers to want things that don't have value to the home in the long run. And you know what? If this was 2016, I'd say, watch HGTV, build that. Now I'm saying, make sure it has a roof and 4 walls. I'll take care of the rest. Okay? Pay attention to the Fed. Rates and new foreclosures, they're going to end up being your competition if things get screwy. And I didn't spend enough time on mortgage interest rates, but mortgage interest rates rising super fast could bring demand down very fast. Okay, recognize the current market cycle. Inventory means everything will sell, price range and area. Understand what's going on, look at those relative supply tables, and you'll know where and what to build. So how do you stay informed? I've been putting out a newsletter once a week, every Monday morning, 8:35 it goes out. And it's one graph, one simple explanation. It's not long-winded. Boom, you get it, it's gone. I have started a YouTube channel a little over a year ago where I put out some long and boring videos that are kind of like what you're hearing today. Listen to those, you'll know more than you want to know about the market. And then I've posted a daily blog every day since July 1st, 2007. 2 a week are on the market. These are the type of things I cover. Okay, so if you want to stay up with what's going on in the market, both Tallahassee and nationally, the resources are all there. It's free. There's no membership, subscriptions, any garbage like that. I do it. It's my penance for what I let happen in 2005 by stopping paying attention. All right, that's all I got.
If you would like to see more videos about current housing market conditions, I've assembled a great playlist that you can view by clicking on the box on the top left corner of your screen. For a playlist of our top tips for home sellers, just click on the box below it. Please remember to like this video, check out the links below it, and subscribe to our channel so that you never miss anything.